very easy to look at the markets because we think that technical analysis.
All right, we haven't started yet, but I'm going to start it and introduce you, and then we're going to talk about what you were just saying. Okay, bro?
Okay, great.
Okay, one, two, three. Okay. Hello, everybody. Welcome to TradeGATEHub.com. The stream, I have a special guest, someone whose work I highly respect. I've been following Grega Horvat for more than 4 years now. And actually, Grega, you and I met for the first time. It was an interview on FX Street when I was facilitating LAR, Live Analysis Room on FX Street. And I had to interview, like they put a gun to my head. I interviewed all the winners of the best of for that year. Best buy side, best sell side, best new contributor, and you know, you won a few years in a row, and that's the first time I talked to you, and I could tell just from talking to you the first time. I said, that guy's very serious about what he does, because you know, I try and get people to laugh every once in a while, and you were serious. So you know, I want to open it up with this, Greg, and we talk a little bit about your journey when you were in school. Okay, and I don't know, maybe the university, wherever it was. What did you want to do when you were in school?
Excuse me, what?
Yeah, when you were in school and you're thinking about your future, and you know,
I mean,
go ahead.
It's, you know, you will go into the markets if you're passionate about them. Okay, if you're looking to go into the markets only because of money, you will probably fail in the first year or two. So I was very passionate about it. I didn't have money to invest, but I was always looking and tracking the charts, and I was totally obsessed with chart analysis, with the bar charts, with candlesticks. So that was kind of my journey into these markets, and which just exploded when I first time heard for the Elliott wave principle, because later I figured out that this Elliott wave principle really fits my style, because it's a tool that actually tracks both technical analysis and also as you know, the market psychology or investment growth. So it's actually a combination of both, and this is something that I'm interested the most. The sentiment, I think that as you know, supply and demand is obviously driving the markets, and from the sentiment we can read a lot of potential upcoming directions on the markets and trends. So
it was really the Elliott wave principles that really got the jet fuel going on you. How long did it take you to, you know, go through all the other like you said, you're looking at candlestick signals, and I'm sure you looked at oscillators, I'm sure you looked at everything. It's a process, because a lot of new traders, where they start and where they end up to finally make the breakthrough and have a new paradigm where they can actually, you know, achieve something in the market. It takes time, doesn't it? I mean, did you have to go through some other things before you adopted Elliott?
Actually, yeah, I mean, it took a little bit, let's say 2-3 years before I fully went into the Elliott wave principle, because you're still at the start. Obviously, you need to understand the basic of technical analysis. You cannot go into something more advanced if you're not familiar with the basics. So yes, at the start, definitely you need to have some kind of experience with trading itself, with the basic technical analysis, before you can progress to the higher step, obviously.
Okay, so you know, Greg,
but I'm still learning. I'm learning from you and from Blake and everyone around, you know.
Yeah, we can learn from everyone, and you know what I'm interested in, you know, there are a lot of practitioners of Elliott, right? I mean, and as there are as many alternate counts as there are practitioners. No, maybe that's an exaggeration, but let me ask you this, and I've asked other Elliott wave practitioners, what makes your style or how you interpret Elliott different than most others? that you've seen? And I know you probably check out other guys and look
Yeah,
at their counts.
because it's very important to not be married to the wave count, to be open-minded and have different views. You don't know if the market will go up or down, but you just have to look for the best potential probability based on the available information when you are obviously respect the rules and guidelines of the Elliott wave principle. So it's very important to understand when you are right and when you are wrong. And obviously when you're right, that's when you are going to pull a trigger. For example, if I say that here we have potential support zone, I will not go and immediately buy in that area. I want that market confirms that we are really going away from that support with a bounce. And then I will probably pull a trigger. So that's the difference, because I want to that market confirms that I'm on the right track with my wave count or with the interpretation. The next important thing is that obviously there are a lot of different interpretations regarding Elliott waves, how to apply on the wave count on the chart. But actually it's really important to focus on clear wave patterns, on directional movements, and not go too deep into the Elliott waves or too deep into the subwaves, because market is not always textbook. You have to look a little bit from a distance in the markets and just try to level the wave counts as simple as possible.
Keep it simple.
The next thing that is very important is, how do you know that the market is very clear and simple, that has a very good wave structure? If you look at the empty price chart, okay, without waves, without everything.
No labels.
Yes, I have to see Elliott wave pattern, let's say in the first 30 seconds, 15 seconds. If I see that, then I know that Elliott wave pattern is clear on that chart. And that's when I could go even deeper into this potential analysis and even potential trading idea.
Yeah, so that, that kind of goes along, and I've talked about it in phase. If I find myself scanning and looking, usually means there's nothing to do. That the good trades are hit you right in the face, Grega, don't they? And they're so compelling, you recognize it. You've traded these patterns before and you're seeing it again. And if you're searching and saying to yourself, hey, I got to find a trade, it's a good time to shut down your platform and walk away, right?
Yeah, exactly. Whenever there's a good trade and good opportunity, you will spot it immediately. You will don't need to search it.
Yeah. How some people are, well, I have a quota of pips I have to make per week, and it's Friday. I also say never try and make your week on Friday. So or Monday lately. I'm kind of eliminating Mondays too. So why don't we move to your current wave structure? I know you want to focus on the dollar, and I asked you, well, which pairs in the dollar, and you said, well, if you get the dollar right, you've got everything else right. So go ahead.
It sounds too easy, huh? Yeah. Okay,
I'm a Forrest Gump kind of guy. I love simple and powerful,
Yeah. Okay, so we know that the US dollar index has rallied quite nicely this year because of tapering speculations. But actually, I remembered very well few months back that they said Fed will not start raising rates until COVID crisis is here. Okay, so we are still in COVID crisis. Obviously, cases are still on a daily news. So in my opinion, this was just a temporary speculation regarding potential tapering. Of course, they will taper, but it's a big difference if they will actually lift the rates, which is, in my opinion, still far away. And even if they will do it, it's not about the tapering, but how much they will taper, right? So I think that it's already priced in here, since we have seen a very nice recovery here on US dollar index. So I'm still aware of potential reversal away from that resistance. If I label the wave chart, the wave count here on this chart, you can clearly see that we rallied with three waves here back into the previous resistance area. You also have this March COVID low, exactly. So definitely important level where I personally cannot turn bullish on the US dollar. Of course, as I said earlier, I'm always open-minded. Maybe US dollar will continue higher from here, but as long as we are trading, let's say below 95 resistance, I really should be aware of potential more weakness. We have also commodity currencies which made a very nice gains lately against the US dollar. So we also have
the Aussie's been a monster.
Yeah, and now imagine that I don't have it here. Imagine looking at dollar equal weighted chart. You will probably see dollar much lower, right? Based on other currencies, because this one depends on the euro moves.
And the euro's been the weak sister as expressed in euro pound, and the euro's been weak against everything, and it's made the smallest amount of gains against the dollar.
Yes, so we really have to consider that the US dollar index is actually the strongest because of the euro, but if we consider where the other currencies are, like New Zealand dollar, Canadian dollar, Australian dollar, then I really think that it's not the real dollar strength, and that this could be the limited upside here as well. So if we go even further, let's take a look at dollar index versus the S&P 500. So we are obviously here in this downtrend, and what I see is that the recent bounce was corrective. So clearly there is still room for this risk on, right?
Yeah.
And in such case, dollar again, it looks like that it can come under pressure in the upcoming months, maybe even towards the end of the year. And this obviously is another reason why overall dollar weakness may even accelerate against the other currencies. Then I have also here dollar index versus the 10-year US notes. Okay. So what we have here is, notice that we have a free wave recovery from the low, right?
Yeah.
And you have this triangle in the middle. If you're familiar with the Elliott wave principle, you know that triangle cannot occur in a wave 2. So if it's not a wave 2, then it's a wave B, meaning there can be again limited upside. So if this one is going to turn around, then you know what it again,
so yields will drop as the dollar's dropping.
Yeah.
Got it.
So I just think that this is very important to understand where the US dollar flows could be in the next few weeks. Also, let's take a look at emerging markets. Okay. Now here, let me make this bigger. Okay, so here we have emerging markets, and notice that we've been obviously in a very strong recovery, like each markets from last year lows. But notice that we have very important overlapping and slow pullback from the highs. It's not a very strong reversal from the highs. It's rather slow. Okay, so
looks like a flag.
And that looks like a correction. If impulses are strong, which obviously are, especially when you look at the previous rise, then this should be seen as a corrective movement.
Plus, Grega, do you believe this? I do. The shallower the correction in fib, like this looks like maybe it's 38%, maybe even less. The shallower the correction, the stronger the potential move out of it is.
The strongest is the breakout, yes. Definitely, because there are a lot of investors, traders that will give up on this particular market whenever we have a very long period of consolidation, and that's when actually volatility picks up, because there is not such aggressive bull bear fight, because there are less traders involved. So that's why I see very strong movements out of the range. So yes, I think that as long as we are here consolidating, I think that sooner or later, whenever we go with this breakout, that moves can be again very strong, and obviously this can mean that this US dollar index again could face limited upside. Also, as you know, we have plenty of commodities still in uptrend, right? And I think that we have here this one. I believe it's very important. Let me just find it here. It's United Steel Corporation.
Okay.
And notice that we have some very nice and important 5 waves of recovery from that lows here.
COVID.
Okay. Yes, and this was obviously a dollar index high. And these 5 waves up suggest that we will continue higher after retracement. And so far, we can already see potential 3 waves here unfolding, a counter-trend movement. Of course, there is room for slightly more weakness here, but overall, I think that this is correction that can take us higher. And if that's going to be the case, that then obviously not only this market, all commodity sector could go much, much higher. I mean, crude oil is also looking very, very impulsive. And I think that there will be more upside coming after retracements on those commodities. But this, I highlighted this particular market because I think it has some very interesting setup for the next few months potentially.
Okay, so could you say this, that, you know, we're just showing what you're showing right now, at least in the Dixie, is it's just starting to roll over. So the rallies that you've had in US Steel has come in the face of at the minimum a stable dollar, and at the maximum a pretty strong dollar from the beginning of the year. So if they can make headway with a strong dollar, what's going to happen to these commodities during a dollar decline?
Yeah, with a weak dollar, exactly.
Yeah,
so
okay.
That's why I'm expecting even more gains on commodity currencies. And I think that in the near future, those who are intraday traders could have some very interesting setups. I think that New Zealand dollar is very interesting. Let me just change the screen here and go to some of the pairs here. So here's New Zealand dollar. Notice that on a big scale, we have a very nice explosive move from a new low, obviously, but then we slow down for a correction here, right back into these 67, 68 support levels. And if you look closely on a daily chart, you can see that there was a corrective personality here from that high. So I think that there can be more upside coming on New Zealand dollar, probably back at some point back to these 2021 highs. And I also have another, as I said earlier at the start, I also have another interpretations because I'm open-minded and I understand that market can always change its direction. So I have another wave count here, which actually suggests that this was a leading diagonal for a wave A, and you are now in a free wave rally for wave B. Means that there is going to be limited upside. So that's my alternate count. But what's the key here for this alternate count is that wave C is a motive wave. It should be made by 5 subwaves, right? And if you look at the 4-hour chart from that wave B swing low, well, I cannot count 5 waves up yet. So, yes, so I think that more upside will come after wave 4. So what I'm doing here is I came out with the most bearish wave count. Let's say that maybe this is even wave 1 and wave 2, the most bearish wave count, but even these bearish structures suggest that this New Zealand dollar will stay in this uptrend after retracement.
Yeah, I've seen you do this before. I like that. So really, no matter what side of the market you're on, thinking there's one more push and it's terminal, or you're a longer term bull because of the impulsive nature, they should both be on the same side of the trade. It's where you don't see another side of the trade. The only other side of the trade would be there's not a wave 4 and we just fail from here. Is that the only negative option? Say we close under, we pull back from here and we end up closing under one of your levels that
6980 is invalidation level.
Okay, that's what I was looking for. Okay.
Yeah, 6980. So that's the wave 1.
That's way down there.
Yeah, wave 4 must not step into territory of a wave 1. So that's why I'm looking at this level. So for the next week, probably, because now it's already Thursday, Tomorrow is Friday. Wave 4 can be a little bit more complex because wave 1 here, if you look closely, was quite sharp and deep, right?
Yeah.
It was a very fast one, this wave 2, not wave 1. So I think that maybe wave 4 can be a little bit more complex. That's why watch out for 38.2% retracement of wave 3. It's around 90 level. And also this represents this swing high potential support after a pullback. And also if I compare this, wave 2 made 100 pips of a pullback. Wave 4 with the 100 pips of a pullback comes very close to that potential support area. So it's a very nice cluster where I think that this pair could stabilize again next week.
All right, well, you know what, I'm going to throw you a curveball because you were prepped with all of these. So my request is, with everything you've said today, how does US dollar yen fit into the picture?
The US dollar?
You weren't ready for the yen today, bro, were you?
Yeah.
Do you have a view? Because I remember you calling 112, looking for 112. And then then I think it was a big break. So actually it's for me, if you could just do some analysis on the fly. And you said, if there is a pattern, you'll recognize it. How does US dollar yen look to you? Because I mean, that's heavily correlated to yields.
Yeah, I mean, dollar yen here, it moved very sharply out of this triangle.
Yeah.
And we already hit this triangle measurement. So what I've done here is I take the distance of this triangle, the widest part, and then measure it from a breakout point. So we already touched this. So again, I think that there can be some limited upside. Okay. Maybe it's just a temporary pullback, nothing aggressively to the downside, but at this point, I really think that the price is so overextended and so high that sooner or later we could see retracement and rather wait on it rather than looking for new opportunities here.
Yeah, because with your view on the dollar, but you have an opposite view on risk on, but your view with the dollar could be, that could be a great short up here eventually, 116 or so.
Yeah, I mean, to look again, here it comes the confirmation from the markets. So the market has to confirm that I'm on the right track with the wave count. So even myself, I would be looking here for potential dollar yen shorts if we, let's say, see yields surprisingly turn back to the downside. We see dollar yen also falling lower. We see S&P 500 slowing down at all-time highs or around here. And let's say the dollar yen comes back towards 112.30 with very aggressive 5-wave drop on an intraday basis, then I would be willing to look for shorts after rallies here while the market is trading below the high. But for now, I don't have enough of information available to say that this is the high and that we are going lower. I'm just tracking what will happen here at this resistance. I still need more price data.
So I love that you and Steve, you could both of you guys have the discipline to wait for confirmations. You don't have to catch the lower high of a wave. You'll give up a piece of the move to have more confirmation that it's real instead of just trying it and seeing if it turns. So, that's a habit I've had for many years. I'll just, I'll execute at that level to get the edge, and sometimes the edge cuts me. So, Grega, was there anything else you wanted to talk about market-wise today?
Actually, we can take a look at the dollar Mexican peso real quick here.
Okay.
As you know, I've been tracking this pair for a while. It's really consolidating. So maybe that's one of the tickers that could produce a very strong breakout whenever it occurs, as we spoke earlier, as you mentioned yourself. If you are trapped in a very strong consolidation for a long period, then you know that breakout, whenever it occurs, it can be very strong. So I'm here looking at wave 4. It's unfolding like a triangle here. So still downtrend from last year highs is in play. Yeah. But obviously we need completed ABCDE subwaves. Now each leg in triangle should be made by 3 waves. And what I see here is that we have only first leg here to the downside, wave A. So you are missing wave B and wave C, right? Meaning more weakness after a rally. And if we look closely here on the hourly time frame chart from that latest swing high, well, you can very nicely count 5 waves to the downside. We recently slotted this, my FIB projections, and we are already turning higher, breaking this trend line resistance. So probably we are stepping into this corrective mode. So watch out for more strength in 3 waves, maybe in the next few days. And then again, next week, we could stop at this resistance around 20.40, 20.50. That's the area where I would be looking for potential new sell-off. Also, whenever I'm observing a corrective retracement against the previous 5-wave movement, I want to see that market retrace at least 38.2% before I'm willing to look for any entries, because that's my minimum FIB objections. Otherwise, there's already a risk reward. It's not very good actually. So that's, for me, it's very important to wait on these levels. Okay,
so very nice look at USDMEX, Grega. Great looks, and learned from you. Great explanation of Elliott and how you do it and waiting for confirmations. What's the best way for people to follow your work, subscribe to your work, you know, after seeing this live or watching the video later? I want people to be able to reach out and contact you.
Actually, we have launched and rebranded the new website, and we have actually now called Wave Traders. So Wave Traders, it's better design and much easier navigation to track all of our work that we do on a daily basis. So wavetraders.com is a new address, and we are tracking here also cryptocurrencies, not only FX and these major global markets. So here we are tracking.
And you're moving into some education now, Greg. Is that new?
Yeah, I mean, we already had those videos in the past about the Elliott wave principle, but it's really for those who are already familiar with the basics of trading in general and technical analysis as well. So if someone wants to see my approach or how I do it with my tips, that's okay. What we have to offer as well. Yes.
Okay. Do you know why R.N. Elliott was impulsive? Because he would wave at everyone down the street. All right, so he was impulsive, but his wife was corrective and made him put his hands in his pocket. Grega, the Wizard of Waves, another great interview with you, Grega. Really appreciate your giving spirit to share your time and your hard work. I know it took blood, sweat, and tears to, you know, hone your craft the way you have. And we here at TradeGATEHub hope all your counts come in and less alternates come in. So good success to you and to all your subscribers, and really appreciate you edifying and giving a nice little tutorial on Elliott and some decent actionable things to consider. Thank you, Grega.
Thank you, Dale, for inviting me, and hope to see you again in the future.
All right, Grega Horvat, everyone, and you could also follow him on Twitter at Grega Horvat. That's a wrap. Thank you, my trading warrior brother. See you down the road. Adios. Thanks, Grega.
Bye-bye.